TradeTheMBI.com. This is John. This reports for the 4th of June. Well, yeah, that was a pretty nice fade off. Of course, they're going to blame this, that, and the other news, but basically, we got this positive extreme from, well, a week ago, and we've now filled it back in. So the ones we had in between filled in fairly regularly, and then we ended up with the full retrace from the pop up move. So perfect timing and just ready for new fund money to come in, which is exactly what we had thought about the other day. It was just one of those general concepts that they tend to do. You want to get a little bit cheaper price coming into your new money, and it's just nice, just roll over. Intraday, you can see that we started up with the quick decline, a little bit of a up move, and then basically that got faded. And then we just basically from that short level never recovered back to it. And the breakdown, even in post market, was pretty fast. Uh, and pretty much we've consolidated from the Asian to the European session within that. And you can see how weak that volume is from the Asian session going through. So that kind of tells the story. We'll look at it from a daily, not a whole lot of anything. You're still a long way from that 76% Morganacci line. And it's that gap. But when you look at DOC, you've got this steel reset just sitting down here near the negative 13, which would be bullish if you dip down below. I mean, because then as soon as it pops back up, you get your next spike. But it's kind of lingering right there. Yeah, it's just a little bit of a torment. But you had the DOC cyan breakover, so that's your brief clue to a short setup, and then it's just a matter of waiting for the intraday. And then of course we see that yes, magenta did break down below and right at was it 33, 31. So yeah, broke closed below it. Still not enough of an up spike. So this was just basically buyers cashing out. You didn't get a huge jump in short activity from that. All modest within what we've been seeing from the huge run up. So everyone's got so excited with every day being an up day that you just ran out of time basically. And here's the brief dip that the Nasdaq's encountering at this particular stage. Moving on, oil not doing anything. I think the market has gotten tired of hearing, "Oh yeah, we're right next to a deal. We're right next to a deal. The strait will open up immediately." That worked for the first month too, but no more. And the impacts are starting to grow. I mean, particularly here in Europe, in that they're really starting to feel the crunch, and it's going to have a pretty significant impact on their GDP numbers as well as uh, just overall activity because you don't have the refined products. Everyone is reaching the bottom of their barrels. I mean, it's a mutual suffrage. Rand's not doing great either, but neither's the rest of the world with the inflation. So once all that gets consolidated and you get a liquidation out of the market from there, that's when you'll see gold make its move. For now, right now, better off being in the market than you are in any other asset class at this particular stage. Bitcoin cannot catch anything because clearly you're not buying anything from the Iranians anymore. And it's just a lackluster situation. There's no real driving force that you would need it. All the gloom and doom for the economy still exists, but what's your alternative? You don't have one, and this was always the problem with, oh, the dollar's going to collapse. Collapse for what? What's your alternative? Go to a yuan, euro? No. So, when you get an alternative from a strong growing economy that isn't running massive deficits, yeah, then we can talk. But I don't see one of those on the planet. So it's like such a waste of breath. It's like not even worth talking about. We'll just continue to follow the readings. I mean, this one was pretty straightforward from the breakdown. Um, you had the DOC spread that started right over here. You still had some strength with the steel, but once it broke down below, uh, and you had the orange spike that took place, and then you just follow that where orange is caught in between. Once it dipped down here, there was the potential, but all you had was the potential until the steel dipped back below 13th. That's not a buy in my view, which is why Ken will stay red in that case. You need a full reset, and particularly you need a reset of the steel under the zero level, and haven't reached that. And so when you get these long runs of steel above there, that's still continued negative. So that hasn't changed from 50K. So when looking at that from a reading standpoint, you're not surprised when you see the MBI white spike because you're expecting new lows. So that hasn't changed either. You'll get modest pops in between it, but that's all they are. They're not going to be sustained runs. Now, you could have a run of, quite a few bars where you're above the plus 13.5. Yeah, but it doesn't happen that often, and it doesn't stay. It's still going to retrace back. You've got to have that reset that goes underneath the zero, at least crosses below cyan, and then back above it. Sort of like here where you came down and then you crossed above. It's your first look, but you didn't get the orange dip. So negate it. It didn't mean anything. You just what it is a representation of you have an imbalance in the amount of people that want to buy versus the ones that are willing to sell, and in that you don't get an aggregate where everyone's going in the same direction, and that's exactly what these lines are trying to represent for you in a broader construct of what it means. And unless you have everybody lining up in the right direction, makes it complicated. There's always competing forces in different time frames, blah blah blah. And that's the whole point of understanding this within the DOC and the different scaling structure of long-term buyers in the red versus mid-term in green, and the steel being the short term. You know, even when they're still pointing up in the same direction, you get a single bar kind of pop like that. But is that sustainable? No, not in this configuration. And that's where we have these, baselines where it gives us a stability. Like, okay, when you shift, then we understand that, things have recalibrated, and you now have an imbalance going in a different direction, either to the short side or to the plus side. That's the easiest way to describe it. That's why I've always referred to these as not a 2D view of just these flat lines here, but it's actually a three-dimensional space that's interacting amongst itself, and their ratios are built in between each other. So it's dynamic that way. It's not just your classic stochastics and these kinds of things. That's not going to function as to how market equilibrium works, and that's really what we're talking about is an equilibrium system. Much closer to fluid dynamics than any kind of statistical value, but that's always been my view. Others have a very different idea of that. Anyway, that's the long and the short of it for now. Anything relevant, I'll put on the team chat. Have a good one. Trade well.